Hello and welcome to today's episode of our podcast, where we will be discussing one of the biggest financial scandals in history, the Bernie Madoff scandal. Bernie Madoff was a prominent Wall Street investor who in 2008 was exposed for a massive Ponzi scheme that defrauded thousands of investors out of billions of dollars. Today we will explore the background, details and aftermath of Madoff's scandal. Act 1. Who is Bernie Madoff? Bernard Lawrence Madoff was born on April 29, 1938 in Queens, New York. He was raised in a middle-class Jewish family and attended Hofstra University, where he graduated with a degree in political science. After graduating, Madoff worked briefly as lifeguard before started his own investment firm, Bernard L. Madoff Investment Securities, in 1960. Act 2. The scheme unfolds. Madoff's Ponzi scheme was in operation over 2 decades. Beginning in the early 1990s, he used his firm to solicit funds from clients, promising them higher returns on their investments. However, instead of investing the money, Madoff used it to pay off earlier investors, creating the illusion of consistent returns. The scheme was able to persist for long because Madoff had cultivated a reputation as a respected figure in the financial markets. His firm was a member of Nasdaq Stock Exchange, and Madoff himself was a former chairman of Nasdaq board. He served as a member of several prominent philanthropic organizations. Let's move on Act 3, the unraveling of scheme. In 2008, the financial crisis hit and investors began to withdraw their money from Madoff's firm. With the market downturn, Madoff was unable to keep up with the demand for withdrawals and the scheme began to unravel. In December 2008, Madoff was arrested by the FBI and charged with security fraud. The scale of the fraud was staggering. Madoff had defrauded thousands of investors out of approximately $65 billion over the course of the scheme. Many of his victims were retirees and charitable organizations who lost their life savings. Act 4. The fallout and aftermath. Madoff was eventually convicted of 11 felony counts and sentenced to 150 years in prison. The fallout from the scandals had far-reaching effects. The SEC faced criticism for its failure to detect the fraud despite multiple warnings, and the scandals prompted regulatory reforms to improve oversight of the financial industry. Many victims of the scheme received some restitutions through the government-sponsored compensation fund, but the damage had been done. Let's move on. Conclusion. The Bernie Madoff scandal was a shocking and devastating event in the history of Wall Street. It exposed the greed and corruption that lurked beneath for the surface of even the most respected financial institutions. Today, it serves as a reminder for the importance of ethical investing and the need for robust regulation to protect investors from fraud and misconduct. Thanks for listening to our podcast on the Bernie Madoff scandals. Hope you enjoy our podcast. Thank you.